Now it's time for your Wednesday brokerage update with our market expert, Donny Gilbert. Donny, what do you have for us today?
Today, Kyle, I brought us a chart that has our outbound tender volumes on a national average, and I've compared that to our outbound tender rejection rates for both dry van and reefer. So we started the volume index back in March of 2018, and we started the index at 10,000 for a national level. We kind of use that as a benchmark. It wasn't a strong market, and it wasn't a very weak market. It's a real good neutral market and a great time to just kind of throw that 10,000 index out there for a good starting point. We use that as a benchmark going across all the markets to kind of measure it against. Is it a strong market, a weak market, kind of based on that 10,000? Well, today here, we're at 10,433. So we're above the 10,000 mark, and that's where we always want to see the volumes market on a national level. But over the past 8 or 9 months, we have seen a lot of capacity enter the market. Rates were great back in 2018, and that attracted a lot of new drivers. So what that's done here is that's kept our dry van tender rejection rates very muted for this year. Right now, we're at 4.33%, which means that right now our spot market rates for dry vans on a national average is kind of right around the contracted or right below the contracted rates. So very weak on rate-wise for dry van. But reefer is a different story. Reefer, we've got an average of 17% for tender rejection rates right now, or 16.94, and it's been climbing over the past 2 or 3 weeks. So right now, in terms of pricing, it's the reefer market is a lot stronger, and with a 16 or 17% tender rejection rate, that's letting us know that rates right now are well above the contracted rates for the reefer market. Now, I want to kind of look in and dive in. Look here at Omaha. I've seen that here that on the blue line is our outbound tender volume index, and the red line is our reefer tender rejection rates. We've seen here over the past few days that the outbound tender volumes have actually picked up a little bit before kind of dipping back down. But our reefer rates, our tender rejection rates are still going up, which indicates that spot market rates are still climbing for reefers in the Omaha market. So this is a good market for aiming your reefers towards. You want to run them, in the Midwest right now, it's kind of a lot of the stronger markets for reefers. So run them back and forth, maybe between Omaha, Indiana, Ohio, and those are really good lanes right now. Or even up and down between Omaha and Memphis.
Let me ask you a question, Donny. Why do you think this is happening? Is it a lead up from the turkey and poultry season leading into Christmas? Is that happening already?
Well, here it's this 2nd of October?
Yeah, it's happening fast.
And we have Thanksgiving coming up in November. So coming actually from the factory, now's the time they need to start shipping this stuff to get into the DCs, to get into the warehouses, and then turn around and get them into the stores. You're not going to go buy a turkey on November 27th. You're going to pick it up a week or two before Thanksgiving, and you'll be buying chicken and turkey both, ham. So all these meals are coming up for a great Thursday dinner. And then, of course, it's going to happen again right before Christmas. So right now, you're going to have a lot of stuff shipping. And of course, our poultry belt, like I say, are a lot of those markets that are between, Arkansas and Omaha. So a great area right now. Keep an eye on this. Reefer rates should stay elevated in this area. Now, I'm going to jump out to the West Coast.
All right.
It's been a tough area on the West Coast, and we had produce season. It was kind of a bust. The rates picked up, but not near like they did in the past few years before. But I'm excited to see that here in Fresno, California, they're actually going through their winter harvest. So you're going to start seeing volumes pick up a little bit, and we're already seeing reefer tender rejection rates starting to pick up in the Fresno market. They're only at 8.74%, but that's getting rates above contracted rates.
That's basically taking it to almost 1 out of every 10 tenders being rejected, right?
Exactly. So what we're getting at here is, with rates rising, it's a market that you want to watch. Maybe start heading your reefers towards that area now, because Northern California is always a tough market. A lot of your carriers get up in Northern California, and they'll take their trucks empty and deadhead them down to Southern California, where a lot more produce and a lot more dry van freight resides. So we see it picking up, we see it starting now. This is a market that brokers need to keep their eye on.
Thanks so much. Absolutely fantastic perspective from Donny Gilbert today. Stay tuned for more updates tomorrow.